what is happening in the crypto market is just comical at this point. You can't help but laugh. We're seeing a lot of red again this morning, which I will talk about. There are some things in the charts that are both good and bad. But what I really want to talk about is, does anybody remember Y2K? I'm old enough to have lived through those times and tell the tales, pass the stories down to our children, right? And there was a lot of people that were freaking out and fear-mongering, the uncertainty of what was going to happen when we flipped over to the year 2000. Would the internet go down? Would the computers explode, right? And then we got to the year 2000 and nothing happened. Everything was just fine. We have talked about this type of event for years now. I've said for a long time there would be some sort of big shakeout around the time of the historic top. And that's exactly what we're sitting in right now, is a big shakeout across the crypto market. Now, here's the thing. The red that we're seeing, it's not fun. All right. I get it. I see the angry comments, the sad comments all the time. Guys, I'm right there with you. I leave the emotion on the sidelines. The current prices don't really bother me because they're kind of irrelevant in the grand scheme of things when you look at the bigger, broader picture years down the line. But here's the thing, is what we're seeing right now is a lot of the same things. We're seeing shakeouts in the market. They're trying to get you to capitulate. It's not really that surprising at this point. We've seen a lot of manipulated days, even as the week has progressed. We've gotten into another day where we're seeing big liquidations across the crypto market, north of $1 billion. I mean, it's just kind of rinse and repeat. It's par for the course. It's the exact things that we've talked about time and time again. Now, will things settle down and will we get a bounce? Yeah, probably. What I will say here is, in terms of BTC, this is an ugly candle. Breaking structure to the downside, not a great sign. It feels like this could be a little bit of a fake out like we've seen before, kind of similar to back here in the early part of 2025. And maybe we actually go down to this 382 level, down around 94.2. But we have closed our CME gap in terms of BTC, which is good. That was that 96.4, I believe it was. And who knows, maybe we'll go down and close this 91K one. I really hope we don't, because that's, again, much lower in terms of structure. And what I will say the promising sign is, at least here, is that alts have still been holding up pretty well compared to BTC. Again, I want to reference back to that comment that was talking about, oh yeah, if BTC hits 96K, ADA is going to be 30 cents. ADA is still close to 51 cents right now, even as we're dealing with a big liquidation day, a big capitulation day. BTC dominance, guys, is, again, testing the bottom of its trend. So you're continuing to see altcoins actually stay essentially par with BTC. It's not really making any, a lot of times when we've had these drops in BTC, we've seen BTC dominance soar because alts have just gotten obliterated on those runs. That hasn't really been happening as of late. And a lot of it has to do with how aggressive the moves are. And maybe that changes as the day progresses. But that's at least a little bit of a silver lining here. But here's what I will say is there really much to be fearful right now about, except for time? And the answer is not really. If we look back at October 10th, what were we dealing with? Oh, I don't know. We were in a government shutdown. We were dealing with uncertainty regarding tariffs. We had major, massive liquidations, right? And a lot of those things have gotten cleared up. Government shutdown's over. We have trade deals in place with China. We now have rate cuts that are likely coming in December. Even if right now the betting odds are 50-50, guys, the data is so poor that we're going to have a rate cut. It's coming. All right. But here's the thing is, I'm watching all this take place. I'm watching all these people, discuss charts and say, oh yeah, this is bad. BTC is going to 76K and, total threes breaking down. We're on the verge of, closing our BTC weekly candle below our 50-week moving average. That means that a bear market cycle is beginning. But yet, while this is all taking place, and we'll talk about this more in just a moment here, while we're watching this happening, liquidity is expanding again. Guys, it's so, I find this so funny because we have to watch the money. What is the money doing? Right now, money is expanding. Money is expanding. Money is expanding. Every time we get one of these shakeouts and one of these dips in the market, if you haven't noticed, the large holder positions, they're expanding significantly. And what happens is, as we start to bounce, retail loses their position in the market little by little every single time. It's not surprising that this is how the large entities in the space win. Now, could we go lower? Sure, we could. It's going to depend on how many more liquidations we get, how much more fear is there in the market when it comes to retail. Those are some of the big things we have to watch here. I will say it's nice to see this leverage breakdown. We're actually down to 136 billion, I think it was last time I saw. $136 billion, which is actually some of the lowest we have seen since all the way back here in June. So that's heading the right direction. Again, a big shift towards spot is taking place. But right now in the week, we're just dealing with fear. We're just dealing with some capitulation. We are dealing with some institutional unloading. $869 million worth of BTC sold over the last 24 hours. That's not good, right? Grayscale, who obviously was a big seller way early on in terms of BTC. Big batch of selling yesterday. BlackRock, big batch of selling yesterday. On the Ethereum side, $259 million worth of Ethereum sold as well. So basically right now, I'm sure everybody's just wondering, when is the bleeding going to stop? And the answer is, I don't know. Probably whenever the large entities feel like it's enough. They do know that there is a fine line between full retail capitulation and people holding on to their bags, right? And that's the big thing here. It's a question of how much is conviction going to hold up. It sucks right now that ADA's retesting 50 cents for the 60 millionth time. But at the same time, when we've gotten down here, we've had nice pops off of this. So right now, again, in terms of ADA, we could be talking about us going all the way down to the bottom of this inner channel here, which is down around 48.5 cents or so. If we really want to get ballsy here and attack the bottom of this trend, we could be talking about ADA all the way down at about 45 cents or so, 44 cents. And this isn't to scare anyone or anything like that. Understand that I still believe a lot of these moves are short term, right? We will probably be dealing with people screaming that the top is in and that we're falling to a bear market cycle for, I'd say, at least another month. We have to get out a ways from the quote unquote historic top and not seeing major, massive retracements in the crypto market for people to realize, oh, shoot, maybe the cycle's not over. Maybe we don't have a 4-year cycle anymore. It's, again, a change is hard, right? It's about getting to this point where finally people realize that, hey, this is different than what we've dealt with in the past. And, that's the funny thing about this. People are unwilling to accept, and shoot, I got off track here. People are unwilling to accept that the cycle would have changed, but they're willing to acknowledge that this cycle's been different than what we've seen historically speaking. And the two just they're not jazzing. They're not meshing. Now, here's the thing. I did want to go back to this. I almost forgot about this. BTC right now is below its 50-week moving average. And I see a lot of people freaking out about this. I want to remind everybody that just because BTC closes its 50-week moving average or closes below the 50-week moving average does not mean you're entering a bear market. It does not mean the cycle's over. I want to remind everybody, August of 2023, back here, July of 2021, March of 2020. What was the other one? There was another one somewhere in here. November of 2019, right? We have seen these things before. And the most important thing I will say about this is, again, the charts, they don't really matter so much right now in determining whether we're, entering a bear market cycle. It's, again, it all comes down to the money. It all comes down to the money. Money is what moved the markets. The charts don't move the markets. So we'll watch and wait and see what happens here. But hopefully this day can get turned around. It's about 6:20 a.m. Central Standard Time. And again, hopefully the U.S. money can actually do something today instead of dumping the markets. So I appreciate you guys. I hope you enjoyed the video. We will make it through this, but have a great day. Catch you guys in the next one. Take care.